So welcome back to the show. You are listening to 89.1, the Radio Blue Mountains, and we're the business show. And as I mentioned at the start of the show, Karen Lister is our local real estate agent expert, and unfortunately she's unwell today. And so we've asked Rob to come in a little bit earlier for his finance segment, and I thought maybe we could sort of just chat about the changing lending landscape and how that might affect you if you're in the property market around, you know, if you're thinking about buying a house or upgrading or investment, and some of the things that we're seeing and that lending space and the impact that that might have. So what do you think, Rob?
Yeah, well, I think it's credit's certainly becoming tighter, and I think it's probably wise not to assume that you'll be able to get the loan that you want. So I think we were chatting off air there earlier just to say how often people just buy a property on the weekend. And I had one of those calls, which I do welcome, but I had one of those calls this morning. And lady said, I didn't mean to do it, but I did. I bought a property and I was chatting to her on the way up. And we had a bit of a chat over the phone. And basically, but the basic info she gave to me, she's going to qualify. Yeah. But generally, it's not such a good idea to do that because things are tightening up. Yeah. The big change is that the lenders are looking at living expenses more closely. And that used to be very much whatever you said your living expenses was what it was. But a lot of lenders are drilling down into your transaction accounts and trolling through them and adding up how much you're spending. And they're coming back to us and saying, please explain. The client says I only spend $3,000 a month. We've actually calculated they're spending $6,000 a month. So there's going to be a lot more explaining to do. And it is going to affect things. One article I saw said that it's going to reduce overall lending limits by about 35%. That's massive.
Huge.
It's massive.
Which this is the sort of thing I know we're not property experts, but what does that impact going to have, do you think, in the property market?
Well, there's no doubt. I mean, even not being property experts, it has to. It has to, because it's going to, if people can't get the finance, and a lot of people who could have got finance a year ago won't be able to qualify now, it's going to take buyers out of the market, which is going to reduce demand.
But
and
were
potentially
they really buyers? Because this is what I was seeing from my point of view, was lots of people had put down their point, 0 to 5%, you know, as their holding deposit. And then we'd get an extension on cooling off. We'd get because finance still wouldn't become, and eventually they'd lose it because they still couldn't get finance. And that seemed to happen for a lot of people who had already done their so-called pre-approval. When it came to actually looking at the contract and what they were buying, the lender turned around and started to ask a lot more questions.
Yeah, well, it's interesting you've had that experience, because we don't have many that get declined. So maybe in some cases too, when someone's declined, then we'll go to another lender. And you know, things are changing. But that's interesting, because that's your experience of people who are going out there and purchasing prematurely.
I think the thing about that, Catherine, is to really make sure that you're, if you are in the market to buy, that your pre-approval is still valid, because all lenders have different lengths of time too on the validity of that pre-approval.
And what your pre-approval is for, because I had one client who was buying through a self-managed super fund and had pre-approval, but they then went and bought a, I don't know if you know it, the Uni-Lodge apartments.
Well, that wouldn't be an acceptable
and that's
security.
Not.
No,
and
no.
they lost their deposit because of that.
And I suppose, again, that's pre-approvals are simply an approval in principle. So here it is in principle, and if everything is as we expect it to be, it's got to be the right
size, it's got to be the right investment.
Again, that's the sort of thing where I think working with an experienced mortgage broker, we would have knocked that on the head before it got any further. Straight away.
Yeah, because they were just doing it straight with the lender themselves.
Not going to work. Not going to work. And so there are all sorts of issues that can come up. So the lender, no matter how solid that pre-approval is, if the property is an unacceptable security, they're not going to lend against it.
And if this is an incident that I've had recently, whereby if your circumstances change during that pre-approval, I had a poor client, this young lass that's been a client for a long time, put her into her first home, which was just a unit years ago, since got married, got a baby, and we've put a lot of things in place over the like getting her back to work after maternity leave, and we finally got the pre-approval in place to sell the unit and buy the house. They're so excited. And she was caught up in a large company that has gone bankrupt. So she's lost her job. So she said, what happens now? And I said, well, as sad as it is, the pre-approval won't be valid unless she does happen to pick up some work. We may be able to change it. But I said to her, more importantly, at least this happened before you had higher repayments.
Well, that's right.
Yeah.
You know, you've still got a roof over your head. But so your pre-approval too, and I think the other thing that listeners should be aware of is a good thing to ask your mortgage broker is, has your pre-approval been actually assessed by an assessor, or whether it's just a computer generated?
Some lenders are just electronic.
Yeah,
no, it's not an actual a full assessment.
So that's actually verification.
So it's just
everything.
Yeah, that's right. Because some of them, they just basically get the pre-approval back in 5 minutes because the computer's assessed it.
Yeah, and that's where I think a lot of people, they go to me, oh, but I got pre-approval. And I said, from where? And they tell me the computer.
Yeah.
And I go, well...
I think a lot of the banks themselves too do
the banks do that as well. And again, I think, it's like for me, you know, like yourself, Peter, you know, experienced mortgage brokers, there's things that we'll look at and identify where the risks are, what could change, you know, when it comes to going for the full approval. So it's really just an approval in principle, and if it's someone who's casual and it's been pre-approved on casual earnings or maybe with overtime, if that all changes, it may not qualify when they find the property, if the amount of work that they're doing reduces. So there's all kinds of things that can happen.
Yeah, and I think to Catherine's point too, and to try and keep our segment around the property, is that the property has to be acceptable to the bank.
Yeah, that's right.
So just because you think that it's going to be a great investment to buy, as your example, a uni-lodged property or a one-bedroom unit in the city, or you know, this studio apartment because it's got water views and it's going to be fantastic, the bank actually have to be happy to take the risk of that security. So those things, as you know, Rob, all depend on how much deposit you're putting in and all of those kind of things. But they're really, I think, important discussions to be having. So get your pre-approval, but then what are the limitations on that pre-approval?
And also, if your pre-approval includes a family guarantee, make sure that you've actually told the parents how much you're intending to spend. I had a nasty... I had an unusual...
Get to that point? Rob and I both got our eyes falling out of our head.
I actually had it happen to me.
That's unbelievable.
Recently, where I did an independent legal advice and going through the documents with them. And I said, now you realise this is for $250,000 over your property? They go, no. We were told it was $105,000. So the children have added on to pay out things and I don't know what else. And that caused a rather large family discussion.
As I'm sure it
should. So it should too.
Yeah, and that's just, and you know,
that's why you have the independent legal advice, so that everything's very clear.
Yeah.
But again, it's so important to have, and I don't know how that got through, because the banker or the mortgage broker would normally have, as we do, I normally have a conversation at least over the phone with the parents before I do anything. Yeah. Because it's all over if mum and dad aren't happy about it.
I get everybody in the space. That's where I say, you know what, we don't move forward till we have a conversation with all parties. Because we just actually had, not really unbeknowingly, but sort of kind of a situation with a family pledge loan where the parents' property became unacceptable to the bank that I lodged it at because it was so large in acreage, which it wasn't something that I had flagged. I knew it was acreage, but I didn't realise how big it was because it was only in Winmalee. But so unfortunately we got to the nth hour and security unacceptable. So again, it's another thing, and there'll be a solution, but it just takes time to relodge with a new
That's what people need to realise, is that their timeline may not be the timeline that they particularly, you know, they want to work towards. But, you know, you can work with things and get things done, but you need to have a bit of patience at times.
Yeah, correct.
But I think you know, talking about property, all this stuff, all that sort of stuff, has always been there anyway. But the thing that's going to affect the property market is the tightening credit policy, and there will be. I believe there'll be less people qualifying for loans, and that's going to put further downward pressure on the property market. I just got this email today projecting property prices up to 2020. Sydney housing to go down by another 5.4%, units 6.3% down. Melbourne is projected housing to go up about 7.3, units down 3.6. Brisbane, housing up 9%, but units down 9.8, which is a little concerning since I have a couple of units in Brisbane.
Right, if Rob had any hair, he would have lost a bit more now.
So should have... Look, the thing is, like with all property, you've got to look at it as a long-term investment.
Yep. And also, I think that's where it
important.
comes in, you know, with having an agent that is also going to be realistic in price setting, is going to work with conveyancers, mortgage brokers. You know, they just don't do a sale and move out, move out of your life. I mean, lots of times we've relied upon agents to get messages across, and I think that's where picking your agent becomes really important.
Most definitely. This one that I had a look at just down the road from my place on the weekend, where I was just out walking the dog, and was larger land than what we've got. And
I've seen that one.
Living with Turtle Man, I kind of thought, and I wandered through, and then I went back and said, really need to come and have a look at this. Maybe we should consider. But chatting to the agent, because it's going to auction, and so he gave me the price to which they're expecting it to sell for. But we mentioned it'd been on the market for a while, and they've had to readjust the price by over $200,000 on what the vendor was expecting.
That is very significant.
That is huge, isn't it?
Very significant.
Now, I'm not sure whether that benchmark they're giving us now for auction, that they're hoping to get more. They're just trying to bring in some, make it a bit more attractive. I'm not sure. But that's huge.
Vendors are going to have to start lowering their expectations.
I agree.
It is coming down.
Yeah.
It's
But
already
I
happened in
suppose
Sydney.
so will real estate agents have to readjust their commissions at that point.
That's right.
Well,
Yeah.
I think that to your point before, Catherine, is it just reiterates the importance of having the right people in your team when you're going through this, whether you're buying or selling or whatever. Have a really good local agent, I think, is really important that understands your local market. And someone that you feel it's not all about getting the highest price to offer your listing, whoever says they're going to get the highest. Like, get someone who you know that's going to actually understand the market and help you to... You still want to get the best price, but you don't want to be...
It's almost irrelevant, in my opinion, in terms of what an agent says they can sell your property for.
Yeah, agreed.
Because
What somebody wants to pay for it.
They're only really estimates at the best of times, really.
Yeah. That's great. Well, I hope we did you proud, Karen, on your little property segment today. And we're going to just throw to some more music, but then we're going to come and chat some more with Rob about, I think we're talking about the RBA and the economy.
The budget. The federal budget.
Oh, the budget.
Almost forgotten about that now, haven't we?
Yeah, that's kind of old news, but I thought it was a good budget. Be interesting to hear your take on that. So we will just shoot off. What do we got? Oh, Elton John and I Kiss the Bride. Now that fits with the royal wedding theme.
Wasn't it one of the songs?
I think Elton actually sang at the reception. I'm not sure he sang this one because I'm not sure that would be appropriate.
I'm sure.
Anyhow, we've got Elton John and I Want to Kiss the Bride. There you go, Elton John with I Want to Kiss the Bride. Welcome back to Radio Blue Mountains, and you are listening to The Business Show. And my name's Peter Davies. I'm here with our co-host Catherine Hawes from Digital Age Lawyers, and we've got our regular guest in Rob Lees from Mortgage Choice. And we're going to be chatting about the budget.
The budget,
budget.
Everyone's on the edge of their seats, I'm sure.
Oh, I am.
No? Yeah,
I love our segments.
It's like there's some good stuff in this budget, and it probably is, as commentators said, more of an election budget because there's tax cuts. And I think that's probably the best news for most people, that there are going to be tax cuts.
Yeah.
Probably not much in the next financial year. It's just a little bit of a sweetener, where there's a tax offset that probably it's going to put about $10 a week in the pockets of most people who earn up to about $90,000 a year. But the big tax savings are going to come in, no, what year is it? It's about 5 years' time. Where am I? Just trying to find what year it is. 20, there it is. 24.
Yeah.
24 to 25 onwards. Then we're actually going to, it's just a long wait. Will I still be working then? I don't.
Oh.
Yeah.
7-year wait.
It's a long wait. So, but what will happen is they'll
That's
actually
an optimistic government.
take out. That's forward planning. So whether or not this thing will come about, but the plan will be that we'll actually lose the middle tax bracket that is at 37%, and so at that time you'll pay only 32.5% up to $200,000, an income of $200,000 a year.
So if you're smart, the goal is to be working on getting some pay increases all the way up to 200 between now and 2023.
Yeah. So look, it's
yeah,
flagged
but that's
as,
what isn't really happening, I think.
Well, we'll see what happens because it is a long way off. There is going to be a short-term variation in 2018 and 19 where the bracket, the 32.5% bracket goes up to 90,000. So there's a little bit of an adjustment, but it's not really going to amount to much just
it's currently
yet.
sitting at 87, isn't it?
Yeah. So it's just very, very marginal. The plans to continue to drop the company tax rate over time also are waiting until the year 26 and 27 down to 25%. For small businesses, the 20,000 lump sum expenditure, capital expenditure has been extended, so it's an instant write-off. And there's a whole lot of infrastructure spending as well that's been announced or is really continuing, and that's going to put more money back into the economy as well.
So what do you think the government's outlook is?
Yeah, so looking at their figures, I mean the interesting thing is that they're projecting a surplus, and they're saying they're giving that surplus back to us in these tax cuts. There was a few unexpected positives for the government in terms of this financial year. There was a little more wages growth, more than they expected, and a little bit of an increase in employment that they didn't expect, and that's what brought about that surplus. And so they're wanting to, so they're not going, so they're going to return to surplus fairly quickly. It's going to drop the deficit, and it's going to be a little bit faster than was projected.
But you've missed the most important point.
Which was that one?
That was that the tax on craft beer.
Oh yes, I did read that, but sorry, I didn't.
No.
I did see that.
So
it wasn't in my notes to highlight. I'm sorry.
You can at least get a bit cheaper beer. Well, it'll actually be really good for some of our local industries, like those small microbrewers, and like we have.
And there's a few around here in the mountains,
and out those that have been competing against the big boys in a sense on tax. So it will make them cheaper.
Yep.
And anybody that makes alcohol cheaper is a positive.
Yeah, well, it makes the government popular, doesn't it?
Well, what, bread and circuses? It's been an old trick since ancient Rome.
Tax cuts including cheaper beer.
We've had our circus, we've had the royal wedding, we've now got our tax cut. So
the tax cuts on beer.
So then the outlook must be pretty good.
Well, look, if they can do that, yeah, maybe. So some economists think they're a little bit too positive, which is probably the case. And in terms of their projections, it's more about the wages growth, that some of that seems to be a little bit too optimistic. So whether that plays out or not, it remains to be seen.
I think that's a difficult one, isn't it? And I think
it is.
That unemployment is, the rates are quite low, which is good. And the government did announce that there's been lots of, what I liked in the statistics were that there's lots of full-time roles that have been created in the last year or so, which is positive.
Yeah, but I think that's unrealistic in today's world. Like the gig economy is certainly taking over. Like how do you class full-time now?
Yep, well it is changing quite dramatically.
I just think
as to how do you measure employment?
And so because realistically you could be in the gig economy and working full-time for 3 different people. That's right. And you're still full-time employed. Employed. Depends what you use as that measure. Because I don't know if they're keeping pace with the changing nature of the next generations.
That's a valid point. Although if the statistics are saying that the full-time employment they have created a certain amount of jobs, and that potentially is excluding the gig economy, would that not make it more favourable? Like, I think that's a very good question, is how does that fit into
Well, and then the
analysis?
measurements we now use, because our world's changing.
Yeah.
But it doesn't appear that sometimes when we talk about, and it's a bit like with law and, you know, with finance and economic, we're not sort of, are we really looking at what society is doing?
Yeah,
You know,
that's a good question.
because the gig economy's here.
Oh, absolutely. Absolutely. That really is an interesting question, and that is definitely on the rise. Absolutely.
Yeah.
Absolutely.
Well, the
And
next
how do you-
generation do not want to, work, if it is full-time, they don't want to work for you for more than about 2 or 3 years, if that. And secondly, they don't want to come into an office every day. They want flexibility, different environments that the gig economy can definitely provide. You know, I wonder how much they survey things like Upwork and Freelancer.
Yeah, that's right. Well, technically, I guess they sit in a self-employed category, but how does that relate back into a full-time or a part-time role?
Because it should be an
employment
income, I think.
statistics.
I think roles need to go. I think it should be now, you know, are you, earning a full-time income maybe?
Well, most of the time, if that's coming through in self-employed income, that would probably be measured as being less than full-time.
Yeah.
Because a lot of self-employed people write off a lot of expenses and maybe take a bit of cash, as a lot of tradies do. That's just a reality. And it's probably not measured then as full-time.
Yeah. It's a bit of work to do there.
Let
So
me bring
what
up
do all
Wayne.
these implications mean for us, do you think, Rob?
Yeah, well, I think it would seem that in most asset classes, like, let's have a look at property, for example. We've already discussed property. We're probably still looking at a bit of, we're looking at a softer market there. It's probably, and then I was going to mention also with the Reserve Bank of Australia and interest rates. In fact, Shane Oliver, the chief economist for AMP, believes there still is a very good chance of a rate cut. If we don't get the economic growth that is projected here, we still might need a bit more stimulation. So it's still not kind of, you know, we're talking about this gig economy, but is it being reflected in terms of our GDP? So we're not really getting the growth yet. So there's still going to be this softer property market, as we've discussed earlier. Shares are going to have a modest, Australian shares, a modest sort of growth. It's not going to be spectacular. We're already over, the ASX is already over 6,000 points, which was about where it was pre-GFC. Just going to be modest gains. It's probably going to be a bit more growth in the overseas economy, and obviously fixed interest and bonds is going to be pretty low returns because interest rates are going to be low. So we'll wait and see how it all unfolds.
So what's your advice at the end of all of that? If you were, obviously you've just got to ride the wave, but if you were thinking about your own future and given the economic outlook from the government, and if you're a property owner or you weren't in the property, what would you suggest to people?
Well, I think always with investment, you've got to take a long-term view. Just have to take a long-term view. And it's important to get the right advice and invest in growth assets. Growth assets are shares and property.
Yeah.
Our super tends to be in those sorts of products. And I think we've just got to be patient about the gains. Yeah. There's probably not going to be big gains in the next couple of years.
Yeah.
So I think you've always got to look at a 10-year horizon. So if you've just bought property, don't expect it to double in price in the next 2 years. Give it at least 10.
Famous quote of the day.
Yep.
Yeah. Particularly in the Sydney market.
Yeah, that's right.
Maybe if you bought in Hobart, you might
That
get lucky.
might be different. Yeah, that's right.
Fantastic, Rob. As always, very entertaining. And very knowledgeable, so we appreciate you coming in and sharing your knowledge with us. If anybody wanted to catch up with you and talk about any of that stuff that you've spoken about today, where's the best place to find you hanging out?
Yeah, just give me a call at Blaxland office.
Yep.
That's my main office, 4739 9749.
Perfect. And we'll see you in a fortnight's time, where I'm sure you'll have some more very knowledgeable information for us all to share.
Thank you.